The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And it's good morning to our friends in the land down under, and good afternoon to those of you battling COVID in New Zealand, as we are here in some states. Anyway, let's get on with things. How's the volume, guys? If someone would please just type into the question box if the volume is. If you can hear me all right, yes. Oh, Dave, good. Thank you. I'm glad you're with us today, my friend. It's wonderful. Okay, so boy, oh boy, what a week it's been, and what 2 weeks it's been. I mean, it's been pretty sensational stuff, hasn't it? Anyway, let's move on. Let's see who's with us today. Yes, Anthony down in Sydney. Good to have you with us, mate. Blake, of course. Conrad, Dave's here. And let's see, there's plenty of people coming in at the moment still. Dave over in New Zealand, and no doubt Jonathan's not far away with him as well. Don's with us, George. And we got Greg with us over in either Colorado Springs or Texas. We're not quite sure where he is today. Good, that's my eyesight going here. Jeff's with us. Okay, the other Jeff's with us. Chen's with us. Great, big turnout. Jonathan's with us. I said hello to him. John's with us. A couple of Kendalls are with us. Keith's with us. Marcel up in Canada. Marcel, one of our longest serving members. Great to have you with us, Marcel. I hope you're in good health and trading well, my friend. That's grand. Mark, of course, is with us. Mark Elm, Mike Mitsos, the Chicago dentist. He's a tutorial guy from years ago, still with us. Miles is with us. Nathan, Norbert, of course, up in the snowy pine country up in Canada. Paul's with us. Peter's with us. He's the short-term trading guru. He's done a tutorial with us. Rolf down in Melbourne. Good to have you with us, mate, my friend. Sean's with us. He's a tutorial guy as well. And plenty still coming in. Phil, good to see you with us, of course. Wonderful. Okay, so let's get going. Well, it's been a hell of a week, hasn't it, folks? I mean, what else can you say? It's just been marvelous. And we'll go through some of that stuff as we move along. But interesting times, and that bit of volatility in the US dollars making a terrific difference. I mean, the Forex trading over the last fortnight has been extraordinary. And some of you may have seen the post that I've put in about it. We had 15 signals. They were all elected and all profitable, or something pretty close to it. Anyway, let's move on. As you know, markets are... John L. from Coffs just joined us. Good to have you with us, L, buddy. As you know, markets are rational and orderly and sometimes predictable. And the Daniel Code controls all markets in all time frames. Priorities of trading, folks. I've shown you this every time I do a webinar, I should say, but market selection is so vital, and I don't put enough emphasis on it. Don't trade markets that are not having movement in them. Your job is, however many markets you're trading, 1 or 2 or 3 or 4 or more, you should have at least another 4 or 5 markets that you're looking at and being aware of, because if you can stay with markets that have enough volatility in them to have some vertical movement, you make an awful lot of money. And I mean, those of you who've been with us a long time know that you make a ton of money. In fact, you make more money trading Daniel Code futures and Forex than anything else I know that is legal, which is a big statement. But one of the key skills you need is be looking at various markets. Don't get tied down to one or two markets. I mean, the vast majority of people that come to the Daniel Code say, I want to trade gold and S&P E-mini. And the Forex guys, they all want to trade, euro, cable, the Kiwi, the New Zealand dollar, etc., the Aussie dollar. Don't be tied to any one or two or three markets. Have a decent sized group of markets from different areas. You've got Forex or currency futures. If you want to trade those signals in currency futures, you can. You've got equities, you've got T-bonds, you've got softs, you've got the grains, you've got coffee, sugar, wheat, soybean. Boy, look at the soybean trade today. We got long soybean yesterday in the 6S program, and it was pretty nasty. It was a nasty outside bar, down, then up, then halfway down again. Anyway, we got long at the end of the day. It didn't look terribly enticing, but wow, look at today. Look at the bar in soybean, $2,200 straight off one contract, 2 days. Great stuff. Anyway, see if you can get your head around looking at some additional markets. Markets that are moving are markets that will reward you. Markets that are stagnant, you're going to lose money. That's the only time you should consistently lose money, if you're in a consolidating market. So be super aware of that, folks. So we're going to talk today about the makings of a market top. We've been sort of talking about this for a while, but I've been giving it a lot of thought. And sort of what are the main reasons, the technical reasons? Well, equities continue their decoupling. There's this long-term argument about growth versus value. So growth is the NASDAQ, value is the Russell, growth is the NASDAQ. But the market leadership has been getting thinner and thinner, and really it's just the FANGs pretty much that are supporting the NASDAQ, and through that they're also supporting the new other markets, equities and what have you, S&P, etc. And that can continue for a long time. I mean, the FANGs are just such extraordinarily unusual businesses. They're just so perfect for the times. And regardless of what you think of their proprietors, they have been brilliantly executed, and that's the strength. But some of the general enthusiasm for tech stocks, I know it's been misplaced. We talked many months ago about WeWork, which was one of the greatest disasters ever to befall a listed company and its poor bloody shareholders. But it was really a property play, but it presented itself and marketed itself as a tech stock, and that dash of tech is what has been driving so many of these businesses where there's really no tech involved, or very little. Leverage in equities is reducing. Margin lending is a huge, huge business, and it's absolutely vital to what's happening in the stocks. And leverage in equities is reducing. And the most shorted stocks ramp, which seems to be rolled out once a week at least, if not more often, it's losing its edge. It suffers from the law of marginal utility, and it's been used a few times. Have a look at this new screen I'm showing you. I'll just make sure this is changing so you can see it. Yeah. This is Peloton, and this is another of a story from Zero Hedge today. I love the way he's written it. After 3 years of people pretending the emperor was not naked and that Peloton was more than just an exercise bike with an iPad super glued to it, it's all suddenly come crashing down. This is exactly what's been happening in so much of the supposed tech stock. This is WeWork. This is Peloton selling bikes for $1,800 and marketing themselves as a tech company. And they're not. They're a buyer or a reseller of bikes with some technical abilities. That doesn't make it a tech stock. It makes it a bicycle stock. That's what it is. And it's just starting to come unhinged, some of these, and I think there's going to be more. And that I see as one of the big weaknesses at the moment. The market's run so far for so long, and the look at what's happened with a lot of the China IPOs. Um, it's run so fast for so long, and there's just been such unlimited enthusiasm out there that the punters have pretty much believe anything. If you've got an idea, it doesn't have to be a new idea. Any idea will do. The best ideas are old ideas recycled and made a little bit more attractive, a little bit more fun. Then the money goes in, and the shares go to the end of the world or to the moon, as they say. But I think that's going to be what's going to break this thing. It's a bit like what happened at the 2000 top in the NASDAQ. People just suddenly started to realize that all of these markets that were promoting themselves and their share price on the basis of eyeballs realized that eyeballs ain't profits. And it took time, but gradually as that realization sinks in, those particular markets become less attractive. And I think that's what you're going to see very shortly. So there's a lot of big questions around. They're exclusively macro questions, really. Inflation, I talked about that many months ago before the rest of the world was talking about it, but it's a real problem. And you'll be seeing significant price inflation in your everyday lives, in your grocery shopping, in your you don't have taxes on gases, but we're at about $1.96 or something a litre, not a gallon, a litre down here, and that's a problem that's not going to go away. Wall Street Journal has a very interesting article out about debt in Japan and how Japan pioneered this idea of by having a fiat currency, there's almost no limit to what they can do with the funds they create, and they own well over 50% of all government securities, and they own a whole lot of stocks as well. And we've seen the things that Japan's done with negative interest rates and running down to almost negative, and those are things that have been copied in the United States. So Japan Federal Reserve in Japan has been a little bit of a experiment that's picked up by the US Fed, which of course is the one that matters, because in all of these financial matters, what happens in the United States affects all of us, as the old saying went. If the US dollar sneezes, the rest of us get cold. So these sorts of issues, these macro issues, they've been in place for years, but they're certainly valid. But nothing in there tells us when they will matter. And I've often described economists as witch doctors because, yeah, they can tell you things that are happening, but with all sorts of levels of importance on them. But there's never a trigger to tell you when. And as futures traders and forex traders, that's vital to us because we're trading on small enough time frames, and we're compelled to trade on reasonably small time frames because of the risk on your stop loss management. So those macro issues, you need to be aware of them, and they're undoubtedly true. But amazing how this argument about debt can be spun both ways. There are folks who, conservatives, say, debt's a problem and has to be managed and can't be excessive. And then on the other hand, you've got what's been happening in Japan and what is now happening in the United States. Make no mistake about that. This Biden administration has grabbed onto this with both hands, and you can just see the amount of spending that's going on at the moment in the US. It's either started or it's going through Congress now. The numbers are so massive they just get to the stage that they certainly have no meaning to an individual. If you if you have a look at some math that says that the average family in the United States is supporting $900,000 is their share of the national debt, which is trillions and trillions of dollars. It's quite extraordinary. There are arguments that you should be having more spending. And of course, politicians love to hear that argument because that's really their only hope of getting elected. You see what's happened in politics in Japan. There hasn't been a 6-year government there for the last 4 governments. They've all failed to sort of go anything past 1 term. Elections coming up in Japan soon. Government's scratching around for how much money it can lay its hands on. You're seeing the same thing, exactly the same thing in the US. So, bigger issue than that is some commentary from Rabobank that they occasionally come up with something that's rather clever. This is from Bloomberg. Of course, we've got the Jackson Hole Fed meeting, my today, your tomorrow, investors, this stimulus from government. I mean, it's extraordinary. $120 billion a month being pumped in by the US Fed in QE, effectively. I mean, markets have been booming and booming for years. The stock markets have been up for many, many years now, since the 2009 lows. And it hasn't quite been a straight line, but it's been about as close to it as you can see, with really only 1 or perhaps 2 exceptions. Yet you've got the government pumping in these extraordinary amounts of money. But what you don't know is that Treasury is doing the same thing, and Treasury can do that as well as the US Fed, but you don't hear about it so much from Treasury. Whether they're buying or just simply issuing securities is effectively a refinancing option of the national debt. And that's going on all the time. You've got markets at record highs. It's not a great bull market, been a fantastic bull market, one of the best in history. Since the 2020 low, the S&P has doubled. I mean, it's hard to believe, isn't it? In March, April, May, June, a little over 15, 16 months from the low, that February, March pullback in 2020. The S&P has more than doubled. Extraordinary stuff. But it's an old bull market. And all markets have to end. They can't go on infinitely. And this is a market that's got so many internal issues that's making it struggle. It's running out of momentum. But, having said that, it's been doing that for years and years. You can find all sorts of things. But this margin debt is a very, very big thing. What we're seeing, FINRA reported July was the first decline in margin debt since the bottom of the equity market in March 2020, what I was talking about there. Look at the numbers involved. Margin debt plummeted, went down to 844 billion from a record high of 882 billion in June. So there is a correlation between market peaks in levels of margin debt and the level of the major equity markets. The chap who was writing this, Sutmeyer, says he's extremely concerned about this trend. He's with Bank of America, who released that. So confidence is never been higher, with the exception of a few limited sectors. I know there's some disruptions in the auto market. There are disruptions caused by the lack of chips to finish the manufacturing of autos. So we've had the disruption of price of used cars going up through the roof, and new car supply being limited. But apart from that, as a general rule, confidence is just sky high. Confidence in markets is sky high. Buy the dip, sky high. and confidence matters. And you know, the extreme case of that was, I've always been amazed that the market didn't show any great concern about the COVID-19 pandemic. And then in the February-March pullback, the shortest bear market in history, um, uh, the market has, as I said, the S&P has doubled, more than doubled from the low of that pullback. And with that exception, there just doesn't seem to be anything that worries the market. Confidence is sky high, but underneath it, things are nibbling away, and some of the foundations are looking very shaky. This advanced decline level on the stocks, that's been obvious since months and months now. And eventually it will mean something. It can't just be the fangs forever, and that's largely why the markets are running out of momentum now. And the Fed has got itself into the wrong position, with equities markets at record highs, all-time highs, close enough. The Fed's still pumping in its 120 billion with a B a month in stimulus, plus, as I've said, what US Treasury is putting in. It's extraordinary. And interest rates, official interest rates, zero or close enough to it. And for the rest of us, very, very small interest rates. Housing loans at 2 and 3%. You never heard of such a thing. But how can we say that that requires that's a market that needs stimulating? I mean, it just seems to me the Fed's got itself exactly the wrong way up. The traditional thing is that when markets correct, the Fed can give them a hand by reducing interest rates, increasing liquidity. Well, they can't reduce interest rates anymore. Going into negative is just not an option, I don't think. Just pumping liquidity. Why? Why would it be doing this? I mean, these are smart guys on the Fed. They're older guys. They've got some experience. They know what's happened historically, surely. And what can the Fed do to cushion the blow when these markets top, as they will top? Gravity has not been banished, merely postponed. So here's a couple of technical things to look at and get you thinking about. So this is a chart that Bloomberg put out, and they are comparing soft data to hard data. And we can see these massive spikes in soft data. Really, that's your measure of enthusiasm. That's what's been the big burn, but that's just wandering off now. That's getting down to levels that we haven't seen for some considerable time. But hard data, it's been on the nose for a long time. But nobody cares. Punters don't care. They just keep buying. Why? Because the broker tells them to, or worse than that, their mate tells them to, or someone in the chat room tells them to. I mean, it's really crazy bear time. Have a look at this, the chart on the bottom in particular. Net new 52-week highs and lows on the New York Stock Exchange. Nothing since early May was the high, and it's just been declining and declining. And this is the number of stocks hitting 52-week highs. It's down, isn't it? It doesn't look like a healthy picture for an all-time high in those equity markets. And the McClellan Volume Summation Index on the top, it shows you just exactly the same thing. The parts that are underneath these markets are not so great. Okay, this is a testimonial, folks. That's quite important because I have a whole lot of testimonials, as you know. Most of you kindly have sent a testimonial when you've done your tutorials. But this is from a gentleman, Greg Palladini. And Greg's a particularly interesting person, particularly for anyone who's thinking of doing a Daniel Code tutorial and learning how to trade not only price, but separately how to trade time. So Greg's been a long-term Daniel Code member. He did a tutorial with me. Can't just remember the date, but somewhere maybe around 2000, 10, 11, maybe 12, maybe even earlier than that. That'd be about right. He did a Daniel Code tutorial in the States. He lived in California. And he's not only a very, very experienced trader, he manages money for private clients. So it's a guy who certainly knows what he's doing. And he came back, he's, as I said, been a member for a very long time, already did a tutorial years ago. But at that tutorial, I was only teaching trading price. I hadn't finalized to my satisfaction the methodology of trading time. And that's been the big thing over the last few years. And a number of you have learned how to trade time. And Greg is now trading time and has had such amazing results that he was kind enough to write to me and have a look at this. Look at the money he's been making. Just trading time signals. But the important thing for a lot of you, I often get people writing to me saying, I'd like to know this or that, and I'm going to do a tutorial, but I want to make the money first. Well, usually you'll find it's the other way around. When you've learned to trade price properly, but probably more important now, when you've learned to trade time, that's when you make the big money. And here's Greg saying, I underlined this so your eye goes to it. I've made up the majority of my DC tutorial cost with the actual Forex trades he entered over the last 2 weeks. So once you learn how to trade, particularly trading time, which you only learn at a Daniel Code tutorial, there's nothing about trading time or teaching how to trade time on the Daniel Code website, then you have this capacity to make the money. But putting the other way around, thinking you're going to make the money before you do a tutorial, you will if you're very disciplined and you stick to the Daniel Code signals, but you make it an awful lot faster if you learn how to trade time. So I thought that was important to come from a guy who has been in the business so long, knows every part of it, has seen every trading scheme and program out there. And as he says, time signals in a mechanical fashion take the emotion out, which allows for that confidence to trade consistently. And he's just been looking at, he's been testing out trading time signals on Forex. And as he says, they're very impressive, and they certainly are. Okay. So you've got Greg's testimonial. Let's move on. Our TO3 and our TO3 Plus signals, folks, are and always have been fantastic. But at these webinars, I tend to talk more about time, long-term time cycles. I've talked to you about our success. I've talked to you about everything, all sorts of things. But the basis of what we do starts with our TO3 and TO3 Plus signals, and they are extraordinary. This is a copy of a post I put on our news page, our homepage, and I've headed it in praise of our TO3 and TO3 Plus signals. So twice this month we found ourselves with 0 new Forex signals and precious few future signals. For the simple reason we've scooped the pool with the signal. We've got every turn. And turns are vital. And the Daniel Code, we are deeply, deeply immersed in turns. Why? Because at turns, that's when it starts biting into your stop loss risk if you haven't got it right. And of course, all big new trends start with a turn. So turns are a vital tool to know and have. And these, have a look at this. We had 5, this is on quite recently, this was on the 20th, Friday last week. We had 5 Forex trade signals, we had 15 future signals for Thursday and Friday, 12 were elected, all are profitable. For Monday, August 23rd, we had a massive 9 TO3 and plus Forex signals, all were elected, all are profitable. Of 7 future signals for Monday and today, 4 were elected and all are profitable. And some of these moves have been really big moves that have gone on for a number of days. Very, very nice. So I wanted to go on the record as saying how much I appreciate the TO3 and plus signals, which is for most of you will be your starting place at the Daniel code, and they've just been marvelous. So, and we've been doing them for a long time now. Don't forget, we made this business public in December 2008. So we've been doing this a long time, and we've had the vast majority of you along with us for the ride. So these signals come out. These were the TO3 plus signals for yesterday. Your today, Thursday, of course. It's Friday morning where I am here in the gorgeous Queensland in Australia, where it's a beautiful, beautiful spring day. It's not quite swimming weather yet, folks, but it's getting very close to it. And it's short sleeves, just really, really nice. And it's really nice here all the time, I can tell you. But these were the signals for yesterday. You can see there were two cells on the S&P. There was a TO3 cell, and there was a blue line cell as well, which is our most powerful signal. And the S&P has been amazing. This is the second or third blue line signal in a matter of a few weeks. It's just been ticking off these Daniel code numbers. And I say that markets know these Daniel code numbers, and they're like magnets, and they really are. It's extraordinary. I'm going to show you some as we move along. But as you can see, this is where you start off your trading. It gets a whole lot better if you actually know how to trade. You can see, for example, we had a sell in soybeans, and the sell was elected, but it then made an outside bar, and we finished up getting long on the day. So you get the start of this. In fact, you get most of it, or nearly all of it, from the TO3 and plus signals. But having a knowledge how to trade is what sets you up getting long on soybean at the close yesterday, and a massive, massive jump up today, $2,300 per one contract in one day. Pretty well. Very, very nice stuff. So that's where it all starts, folks. Then go to our trade program. A lot of you don't seem to know about this, but I've put a new webinar up. It's at the top of the homepage, and it says what we do for you is what it's called, but it says, if you look at the motive, the way YouTube puts it, it's what you can learn or what we do for you or something like that. In fact, I'll actually find it. And it's a new one. Most of you have seen it, but if you haven't, it's right at the top of the home page on the left-hand side, and it appears to say, it's actually titled What We Do For You. Everything you can find at the Daniel Code. All you can see is everything you can FI and how to use it. Go and have a look at that if you're new to Daniel Code, folks. It's not just trading, it's Daniel Code trading. And it's entirely different because we have the one more thing. We have the Daniel Code target levels, and we require those to be found at either a bar, high, low, or a close, accurate to 0.1%, not 1%, 0.1%, 1/10 of 1%. It's very, very accurate. And once that's happened, that sets up the signals, and we don't go ahead madly and buy or sell at those numbers. We have our signal, but we then require the market to confirm to us that it's thinking the same thing we are. We're not arrogant enough to think that the market listens to us. What we do think is that the market is trying to talk to us all the time. And we've never been able to talk to the market because we haven't had the language. And the language, of course, is the Daniel Code. So now we can talk to markets. And some of the time we can actually hear what they're trying to say to us. So finding these price levels, this is the one more thing. If you had to know one thing in trading, I mean, I've been trading for a very long time, and I can promise you I've looked at almost every system known to man. I've paid a lot of money to go to seminars from all the gurus pretty much all around the world. I spent years and years doing that. And in my view, I don't wish to be unkind to anyone, but personally, I've never found a system that worked very well. They worked well enough to let the promoters spruik about a bit, but not well enough to build those big ongoing equity curves that we need. So that's why I had to find the Daniel Code. It's a very long story. It was years and years, literally, of 100 hours a week, just doing numbers. But because I've done the numbers, you don't have to. And we still do the numbers for you. And have a look at these charts. This is all very modern stuff. We didn't pick this out of the boonies somewhere. This was Wednesday's chart. And you can see that there's a red line there at 7280. This is the Aussie US dollar forex pair. And to set up a signal, we need the market to tell us that it's found and acknowledged that number. So very simply, all that means is that we're going to have target recognition at one of the Daniel Code numbers within that 0.1% ratio. So if you look at this Wednesday's bar, you can see it's running into one of the resistance lines at 7280. The high on Wednesday was 7281. One tick variance. Can you believe it? The close, because we can get target recognition at either the bar high low or the close. This market's rallying, so we expect to see target recognition either at the high or the close. So the high has a variance from target of one tick. The close has a variance from target with 72.77. It has a variance from target of 3 ticks. It's extraordinary. And this market with the Daniel Code does it all the time. Have a look at the low down there. That's a blue line number at 7108. What was the true low? 7107 on August the 20th. One tick variance. And 0.1%, of course, is 7 ticks. So, I mean, and this isn't anything new or novel. This happens all the time. This has been happening since before we ever went public with the website. I've been doing these charts for 30 years, or pretty much a good part of it, maybe 27 years, 28 years, and it's never changed, folks. I think all the things have changed in the market since then, since I discovered the Daniel Code. High-frequency trading, electronic trading, pits getting closed in the exchanges, so many changes, yet nothing has ever changed with the Daniel Code and its ability to find these special Daniel Code numbers, which are largely secret. We're a very, very small business. We don't advertise. So we have not a whole lot of clients. And it's just extraordinary. That is the greatest gift to me. The way that the Daniel Code defines all markets with its numbers and ratios, that's the greatest gift of all. Okay, so that was the setup for the Aussie USD on Wednesday, and of course that gave us a sell signal. The first criteria we had, target recognition. So I'm not showing you these charts for any huge, massive move. I'm just showing them to you to show the point of this target recognition, which is what's going on in markets all the time. This was the Euro JPY yesterday, your yesterday, my Wednesday. And that high into the blue line, you can see the blue line is 129,546. Now, these charts have been out there for weeks. These numbers come days, weeks, and sometimes months in advance. But this particular chart, it's been sitting. This is not quite update. This is the last update was done on Wednesday night. But that blue line at 129,546, that's been on the chart for days, literally. It's under members' charts. You can see it yourself. So what was the high of Wednesday? 129,533 against 129,546. 13 ticks. That's all. 13 ticks variance. Extraordinary, isn't it? That's target recognition. That would give us a start of a sell signal. Well, there are many others as well, but that's the first thing. The first point of trading price, the Daniel Code way, which is what makes all the difference, is that you have target recognition. Have a look at the down bar, and I put a note on it saying, this is DC target recognition. That went on the day that happened. That's target recognition at the close. That close was 128, 143. Where's the blue line? 128, 171. Okay, well within our allowable variance. That's not super accurate. We expect generally to have more, better accuracy even than that. Let's have a look at this one, British pound. This is cable, GBP USD. Here was your bar up, your target recognition, which came on Wednesday. The high was 13767. Where's the Daniel Code numbers? 13771. 4 ticks variance. Extraordinary, isn't it? That's what gave you the setup. What happened? That's what happened. Big down bar today. Okay. And this just goes on and on and on. And this is the Daniel Code difference. This is really basic stuff, basic to the Daniel Code. These ratios and the numbers it creates are not Fibonacci numbers. They're not old highs and old lows. They're nothing you've ever heard of unless you've been a Daniel Code member or done a Daniel Code tutorial. They're completely proprietary to the Daniel Code, and they're extraordinary. This is the Kiwi, New Zealand dollar, US dollar. This is where the market was sitting on Wednesday. Let's have a look. There we are. Look at that last up bar on that chart. The red line, the red and black lines are retracements of previous ranges. The blue lines are extensions of previous ranges. This was 69.74 was that red line. That was a retracement of the major range. That's 59.3% of the major range. Look where the close was. 69.73 was the close. The Daniel Code number, 69.74. That's target recognition. That set up a sell. It wasn't elected today, but look what we got today. A turn. There's the turn. Why does it happen? It happens all the time. This is trading price at the Daniel Code. That's pretty extraordinary. This is a really interesting one. This was quite an interesting or sort of crazy trade. This was the loonie, called that reason. No doubt there is a reason. But it went nuts last week. It was running up. It had a huge up bar, and I put a note on it at the time that said this is DC target recognition. And that was target recognition on the close. So the close of that bar was 12828. Where was the Daniel Code blue line? 12827. 1 tick variance at the close. Once it's made that target recognition, it's valid for 2 days generally. Blue lines, it's valid for 3 days. But usually it's valid for 2 days. So the day after that, we got a crazy bar. Have a look at it. Opened pretty much where it had closed, roared up like there was no tomorrow. Didn't find a specific target, but found some resistance. Roared all the way back down. Look where it closed. Excuse me. It opened at 128.28 on the blue line at 128.27. It closed at 128.24. It's tracking these numbers. This is the market's way of saying to you, I know those numbers and I'm tracking them. Have a look what happened on Tuesday. Here we are. Nice bar down. What was the close? 125.88. What was the Daniel Code red line, which has been on the chart since the high? 125.89. 1 tick variance. That's the first part of creating a signal, and we had a buy signal for that market as a result. What happened? This is what happened. Okay, market opened down there, roared back up. Where did it close? 126.88. Where's the first of the Daniel Code red lines? 126.89. One tick variance. Do you get this, folks? You should, because it's vital stuff. Let's have a quick look. We won't dwell on this too long, but have a look at the same thing in futures. So this was the chart from Wednesday. What was it telling us? Well, let's find the chart. Here you are. And this had been hitting blue lines for days. Back the last 3 weeks, it's just been hitting these targets. Look what happened on Wednesday. This was an unusual, very unusual bar. This was the announcement that, of all things, Pfizer's drug had been approved by the FAA. It had only been released provisionally before that. I wouldn't have thought it made any difference. It's been used for millions and millions of doses now. But anyway, that gave this market a little bit of enthusiasm. Look where it closed. The close, 44.93.5. The blue line, 43.94.25 and 44.93.75. 44.93.50. The close, 44.93.75. The blue line. One tick. That's one tick. How many ticks are up there? Well, there's 4 ticks in every point. This is the S&P. There's 10 ticks in every point. No, this is the mini. Too used to the big one. There are 4 ticks in every point. 25, 50, 75. Quarters comes from the rule of 8s, if you didn't know. Look at that target recognition. Okay, it's about 16,000 ticks in that number. Target has found the Daniel Code number within 1 tick. That's the market's way of saying to you, I know these numbers and I'm tracking them. It doesn't do it on every bar. Sometimes it'll do it 2 out of 3 bars, 2 out of 4 bars, but it's tracking these numbers all the time. And that's the market's way of talking to you. So that, of course, set up a TO3 signal and a blue line cell signal. Look what happened today. There you are. Beautiful stuff, isn't it? Absolutely beautiful. Now that red lines, as you can see, they haven't been updated. So they're actually from Wednesday night's updating. And if I update them, we can see that the first of those lines, see if I can help you here. We update that retracement for you. You can do this yourself, folks, and if you've got if you're subscribed to the TO3 Plus, we'll give you the tool to do it. 440, 445, 44.53.50 is the first of the red lines that we use. But of course, if it's on this one, might not be. I'll put it on, stand by. You can't see this. This is all going on the other computer. The minor red line, which is not on this chart, the first of the Daniel Code numbers and half, is at 22.74.25. What was the close? 24.70. Okay, that's not target recognition yet. It's got a few more to go. Okay, let's keep moving. I can tend to get talking too much, can't I? Same thing, I'm showing you how Daniel Code rules all of these markets. And this was copper, and very important market, copper. Look at the turn at the blue line down the bottom. That low was 396.65. What was the Daniel code number? 397.15. Okay, let's have a look at the next one. This was copper today. Little down bar. I'm not showing you these for any great trading benefit. I'm showing you these to show you how these trades are created and how the Daniel code controls these levels. If you know nothing else about trading and you know the price level at which market will turn, and it's going to be one of them, then that's a big start. Or to put it the other way, if you're trading without the Daniel code price levels, you're losing a huge opportunity. It's all there for you, folks. So this was gold on Wednesday. Gold today, your time. Here we are, December month. This was done yesterday, so that last bar you can see on that Wednesday. But the point I'm making to you is look what happened with the setup bar. 2 bars before that yesterday, the grey outside bar, look at that push up there, that high, 1809.1 against the blue line at 1808.0, 11 ticks variance. Have a look next one. At the high, that little squiggly small bar there. The close of that is 1808.5. What's the Daniel code blue line? 1808. Okay. 5 ticks variance. That's all. Then we got the correction. That gave us a sell signal. Next day, Wednesday's low, 1784 against the red line at 1784.3. Today, went a little further, and it's a key reversal bar. We'll see what happens with that. I'm trying to make the point that if you know these Daniel code numbers, you're at a huge, huge advantage. This is soybeans on Wednesday, so I was talking about beans, and I don't think that was what I meant. I'll find it in a minute. Where the big trade today. So there you are. Wednesday's high here was on the red line. The high was 1339 caret 4. That little arrowhead is a caret. That's what it's called. And there are this market goes being one of the grains that moves in quarters. Caret 2, caret 4, caret 6, caret 0. Next number goes up. There's the red line at 1340 caret 0. What was the high? 1339 caret 4. That's 2 ticks away, folks. That's all. What happens then? Target recognition was the first thing we required, and that was your sell, and went down it went. Nothing terribly exciting, but I'm doing this I'm trying to show you how markets react to these Daniel code numbers. I think this is probably the last one if you're sick of it. Here's the Russell. You can see its close on Wednesday was 2238.1. Where was the Daniel code black line? 2236.9. Okay, that gave us a setup for a sell. What happened today? Boom, down she goes. Where did it go to? Low today, 2208.8. Daniel code red line support, 2208.7. 1 tick variance. Pretty extraordinary stuff. I hope you saw that and enjoyed it. So we've gone through a whole lot of these macro things, and we've said basically they don't work. What the economists say is undoubtedly true, well, most of it is probably true. Might be a better rendition, Dave, we're moving on to markets making a top. Dave's got sick of what I've been showing you, for which I apologize. Okay, so what does work? We're on to it now. What works as a timing tool are the Daniel code ratios on different time frames, which we call the fourth seal. This is the S&P index. Now, a lot of you have been trying to match the the fourth seal commentary using the equities chart. It can give you exactly the same information, or it can give you slightly different information which says the same thing. But have a look where we are now. This is the S&P index, and look at those blue lines on there. 4483.7. We're right in that slot now, and we're just underneath a Daniel code resistance line. That's not a fourth seal line. It's a standard resistance line. But look where this time cycle's come to. 44, this is a 36-day chart, okay? The basis for timing charts, 6 days, 12 days, 24 days, and you can expand on that as long as you use those multiples. So 24, the next one up, if you want to go to a longer time frame, is 36, then 48, etc. This is a 36-day chart. In other words, every bar here has got 36 trading days in it. It's a really long-term chart. You can see the blue line gives us the closing high of that rally in February 2015, and 44 days, a very important number. 44 is actually the vibration for gold. If you want to know why, go to the articles tab at the Daniel Code website, and there are two articles there on time. One's called It's About Time, and the other one's called Timing is About Time. It's called Masterclass 2, I should say, Timing Gold. The other one's called Masterclass 1, It's About Time. They're very long articles, but you should read them. They're under the articles tab at the website. So we're right in the slot in the index for money. So price is now sitting right where we want it. What else can we get? Let's keep going through these charts. The 24-day chart, one of our basic charts. This price today is trapped right in that little, what we call a cocked hat, if you're doing navigation on your yacht. And price is in or around the cocked hat means it's valid. 59 days, the strongest of all of the Daniel Code cycles. 59 cycles, I should say, not days. This itself is a 24-day chart. So it's 59 cycles from the February 2000 low, and that is in fact 1,416 days. But as long as you stick to these multiples of 6, and 6 is the vibration of all markets, those who've done a tutorial know this stuff. So 59 cycles from the February 2016 low, which was an important low at the time, gives you 59 cycle right where we are now. However, these cycles are valid for plus or minus one period. So this could be one period late, could be one period early. But that's what the 24 is showing us. It's backing up what we saw in the 36. Let's keep running down these time frames. Dave, we're now down to a 12-day chart. It gets more interesting. We've still got our perfect price recognition, but we've got a 62-day, a 62 cycle time, and a 44 cycle time, and a 29 cycle. The 29 cycle comes from the 2000, the March 2000 low, the COVID is real crash, I call it, the shortest bear market in history. But there it was. So all of these numbers are starting to line up across multiple charts. And here's the next one. This is a 24-day chart. And that's got the 59. We've done that, and we've done that. Let's move on. The most important of them, I think, is this one. And those of you who are regular attendees at this webinar will remember this about a month ago, perhaps even about 6 weeks ago. I was looking, I showed you this chart at the time, and it had the crosshairs on that big world shortest bear market crash from February down till March 2000. And we've been running all of our time cycles off the high, either the closing high or the chart high. Both are valid. And you remember I looked at it and I said, but. I couldn't stop looking at the low of that move. Now, of recent times, particularly the 2007 high into the crash low of 2009, we had a 59 cycle, high to high on the first hop. That's the death cycle. That's the cycle that traditionally will cause significant moves down, market crashes, if you like. The same cycle. Now, the 59 cycle, as you can see, that they've switched places. From that high, from the chart high in February to 2020, 62 takes you to last week's bar. This is a 6-day chart. Okay. If we look at, if I can give you the date of that. Okay, S&P. So I think I've got SPX on here, but I can tell you that that bar ends August 30. Yep, ends August 30. Started August 22, runs till August 30. So we've still got that 59 cycle running for the high, but it's switched to the 62. In other words, where we would be expecting a major turn at the 59 from the high, what we've got is a major turn at 62 from the high. And what's happened is they've switched places. The 59 from the high has dropped down to the low. And the low is giving you the close of last week. In other words, the close of last week was April the 20th, August the 20th, I should say, August the 20th, plus or minus one period. Remember, all this stuff is plus or minus one period. Why is that? Well, as you can see, even inside that circle, you can start from either the chart high or the closing high. You can start your count from the chart low or the closing low, and there's one period difference between them. In fact, the 59 from the chart low could be on the next bar as well. So this is as tight as we go when we're talking about forecasting 6-day charts. We've got both of them in line. We've got price at a known Daniel code number. When I say time and price are squared, I don't mean that in the Gann sense that it's sitting on an angle. I mean it in the sense that time at a known Daniel code number ratio, a ratio that's given us turns in the past, we expect it to keep working, and price is at a known Daniel code number, which this one is, as you can see. It's sitting right on those blue lines. So we have time at a Daniel code ratio, price at a Daniel code ratio. It's almost inevitable there will be a turn. And this chart was put up on August the 18th, so it's moved along a little bit since then. But because these cycles are all plus or minus, valid for plus or minus one period, as I've said, the 62, the 59 cycle from the March low in 2020 can be moved one period if you took it from the swing low instead of from the closing low, which is where it's running from at the moment. Same with the 59, with the 62 from the high, the 59 from the low. The 62 from the high is actually running from the swing high. It could be running from the closing high equally as well. And as I say, valid for plus or minus one period. So, Dave, we've got everything lined up. We've got time, we've got price, we've got fading momentum, we've got fading margin lending. We've got enough things in here to make a difference. So I suggest that we are on high alert and that we're likely to get that turn right now. If this is a top, when do we begin to forecast a bottom? From Brian. As we go, Brian, whatever the chart does, all of these cycles come from what the chart does, price action. So it'll go on, and I suspect this doesn't have to necessarily be a crash into a low. This can be a really long, slow, grinding correction. And that, of course, they're the ones that do the most damage because the buy the dip people keep getting whacked. Investors, buy, hold, never sell. They get more and more demoralized as they work along. But I expect we're going to have a long, slow correction that might get dramatic. As we say with stocks, markets fluctuate, sometimes violently. And I think we're heading there now. We're right on it. The Daniel Code tutorials, folks, you've seen this. We teach you all about trading Daniel Code price and Daniel Code time. And they're two different things, and they're quite extraordinary. If you're interested in doing a tutorial and becoming a super trader, send me an email, please, jneedham@thedanielcode.com, with your phone number, country, and time that you're on, so I don't inadvertently try to call you in the middle of the night. And I'd be happy to discuss your trading with you. And it doesn't matter whether you're an expert trader or you've never seen a chart. The Daniel Code will take you to the elite level, the whole new level. Remember, the trading futures, folks, the business is not to be right. It's about making money. It's that simple. We do this as a business because it makes money. Sometimes it makes a lot of money. If you haven't already, you're welcome to take a free trial. Go to the website, click the free trial button, follow the prompts. Any issues, contact Terry at support@thedanielcode.com. He's our IT guru. He will get you set up and working. Finally, there's our mandatory disclaimer. I ask you to really read this and take it carefully. It is very, very easy to lose all of your money trading futures and Forex. It is also equally easy to make a lot of money trading futures and Forex. The difference is you have to know what you're doing. If you haven't satisfied yourself at least that you are a really competent and sophisticated trader, don't trade real money. Okay, that's all I have for you, folks. Thanks for being with us. Dave, I'm glad you enjoyed that, mate. Stay well yourself. Thank you. Colin, always love the webinar. I hope you're a great teacher. Great. Oh, Colin, that's so kind of you. That's very nice of you for saying that, and I appreciate it. I started on this at about 4:30 this morning. I did 4 hours preparation of it last night, and I've been on it since 4:00, 4:30 this morning. So it's nice to know that that you're getting something out of it. Thank you, Colin. Mick, good on you, mate. Thanks to be with us. Keith. Keith, oh yeah, Keith, yes. Thank you, mate. Thanks for being with us. Akshay, of course. And God bless to you, my friend. Hank down in the Hunter Valley. Good. Over this COVID rubbish, aren't we all? And you're getting hammered for it down there, mate, aren't you? Up here, I have to tell you, it's like no real change. You got to wear a mask if you're enclosed, but to me, I hardly go out anyway, so it makes no difference for me. Mrs. Needham does all the shopping. If I need a shirt, she'll buy me half a dozen, and I'll keep for 5 years, and eventually she'll throw them out when they're worn out. I'm not a shopper, so it makes no difference to me anyway. Take care, Rolf. I'm glad to have you with us, and Mark, of course. I've been with us a long time. Mark's very, very good trader. Thanks for being with us. Enjoy the trading. I've put my orders on for Friday, so I'm off the clock for the week, folks. But I'll be back with you doing charts on the weekend. All the best. Bye for now.